All right. Thank you all for joining the presentation, and welcome to day 2 of our Trade with the Sharks event. For those of you that were here yesterday, welcome back. Hope you had a great day in the markets. And for those of you just tuning in, welcome to the Real Shark Week. Now, I know everyone has a lot going on, so just know that we really appreciate everyone stopping by, and we hope you'll tune in the rest of the week as well. Real quick, go ahead and type a Y in the chat if you're hearing me all right. Good sound. All right. Thank you, Dan. Cool. Very cool. And is everyone seeing the Shark Indicator screen in the background here? Awesome. So for those of you who don't know, real quick, my name's Ty. I'm one of the guys here at Shark Indicators. I've been with the company for a couple of years now, which is quite a privilege because A, this stuff is very interesting to me, and B, this company is without a doubt making a difference for many traders that are using our tools. So it's great to be a part of that. We've been involved in the NinjaTrader ecosystem for 5 years, and we aren't ever here to sell you some holy grail. You've definitely got to put in the work to get to the top. That should go without saying. We just develop dynamic tools for you to use along the way. So before we get started, let's take a look at this disclaimer. I'm sure many of you are used to seeing it by now, but it never hurts. All right, so what we do for events like this is we bring in top NinjaTrader partners to bring you a lot of variety and exposure to different trading methods and personalities with our tools. So each one of these traders is successful in their own right, and each offers a very unique trading style. So let's dive into today's topic with Rob Mitchell, which is using trend patterns and order flow for highly effective trade systems in Bloodhound. Now, Rob is the president of Axiom Research and Trading, which is the mother company to oiltradingroom.com as well as IndicatorSmart.com. He's been the largest E-mini S&P trader in the world at various times, and he's even won the prestigious Robbins World Cup E-mini Trading Championship. He's been a trading system developer for over 2 decades now and is an early adopter of our Bloodhound software. And on top of all that, he is a proven educator, presenter, and mentor, helping others to achieve their goals as traders. So let's just get right into it. I'm going to go ahead and pass the mic and the screen over to you, Rob.
Hey, Ty, thanks for that introduction. I hope everybody can hear me all right. Well, it's asking me to show my screen. Yeah. Does everybody hear me all right?
Yep, your audio is coming through.
All right. Awesome. Well, thanks for joining us today, everybody, and thanks to Ty for that introduction. I have some things to share with you today that are going to be a lot of fun, making highly effective trading systems that are super simple in Bloodhound. Bloodhound's a really awesome tool for me, and when I was first introduced to it, I really recognized that it can help me to take a lot of things that would be on my screen and reduce them down to something that's very simple, just the color changes on the background. And it's just extremely awesome tool. And I have a fair amount of experience in developing tools and testing in Bloodhound and Raven. And so we're going to explore some of those things today with today's webinar. Now, Ty had already covered the CFTC disclosure. Past performance is not necessarily indicative of future results. There is a risk of loss trading futures. I am going to show some trading system results today. And if you read this, in truth, there's a difference between a trading system and actually doing it. And so just be aware that that is part of the disclaimer. But you know, something that I have found over the years, additionally, that makes it possible for traders to be successful is also using only risk capital for trading. And when a trader comes to me and he tells me, oh, I lost my job and I'm going to become a trader, and I don't really have any experience or anything like that, I know that usually that doesn't fare particularly well. So just use risk capital for your trading, and that opens up the door for you to trade the process of trading, some of those processes we're going to talk about today. So how did I get here? Well, it's very interesting. I began trading, I took my first trade in 1978, and I've done a lot of trading in various areas over the years, and I've had the wonderful opportunity of being able to trade for a living for the better part of my adult life, actually. And so I part of what I'm doing with that is just giving back. A few years ago, I was asked to open a trading room, which I did reluctantly, and it's proven to be one of the most awesome and rewarding things I've ever done. And it's also taken me into new areas of learning, and I'd like to thank all those who have been involved in that process. I have a degree in experimental psychology, which involves statistics, and so I use statistics in my trading, and we'll probably use some statistical concepts in what we discussed today. And the very first trading systems that I built were based on those very things that I learned in my degree. I'm also an NLP trainer and a board certified hypnotherapist, and I work with traders one-on-one to help them get on top of their trading and make it all work for them in a better way. So, but I'd like to say thank you to those who have been there with me along on the journey. A lot of times I like to start these things. A lot of times you come in and you're busy, and everybody has a lot of things going on these days. And so this is the learning state. We have over 20 years of data on this. If I teach what I'm about to teach you to a kid to do it in a classroom, the grade point average will go up 1 to 1.5 grades. And so if you just gaze at the dot on your screen, you'll notice that as you do for a moment, that your vision starts to go what we call peripheral. It's just you start to see 180 degrees. So if you bring your right hand up on the left of your, or your left hand up on the left of your head, or your right hand, either one, and just kind of twiddle your pinky a little bit, you'll notice that you can take it pretty far back and still see that pinky moving. And when you do that, it opens up your gaze. A lot of times we're spending our day focused inside of a cell phone or in the myopic little focus of a trade, and we lose the big perspective. And so just doing this exercise, I call it the learning state, helps us to open our mind and open our view and be able to take in a lot of information. And I find that also helps traders a lot. And so then as you take your eyes back off of the dot, you'll notice that you retain that peripheral vision for a time, and that makes it possible to get in the moment. And so the big picture of what we're going to cover today, actually I've got a lot, and some of these things we're just going to have to take a broad stroke on it because some of these things could just be a webinar in themselves. But how to organize your price data for the best edge, what kinds of systems are most suitable for a multi-contract strategy or not, performance of the smart breakpoint system since the last webinar. I was just blown away when I saw that result. I'm going to share that with you a little bit later. We're going to take a look at some systems that are kind of proof of concept or bias testing, and we're going to cover that. So we're going to learn a lot about system design today and how you can use systems, simple systems, to your advantage in your trading. We're also going to look at some price action and range expansion trend stats that are really, really awesome. And then we're going to code a simple trading system in Bloodhound, and you're going to get the code after the webinar. I'll get you the link for that at the end of the webinar. So how do you organize your data? How you organize your data is really, really important. So basically, you've got data that's just coming in a stream, and this price and this price and this price and this price. And how you organize that becomes really important. You have different basic kinds of bar types. Your most basic and probably common one is a minute-based bars. It just takes any given increment of minutes, and it shows what the range is inside of that period, and it'll show you the open and the close. And so then you have volume related bars. You have tick bars and volume bars. And then you have bars like Renko bars, for example, that are ranged type bars. And each of those has different advantages or disadvantages depending on how you're using them. One thing that I can say about time-based bars, for example, is that where the close happens inside of a time-based bar is pretty much random. And so, in other words, the time-based bar doesn't just close at its high or low, because in many respects that time is arbitrary. In some time scales it's not necessarily, perhaps maybe on 30-minute bars or on day bars. But say, for example, on 5-minute bars, where the price closes on that bar is somewhat random. In fact, some studies that I've done in the past show that a 5-minute bar, for example, closes at its high or low only about 12.5% of the time. If I take that same kind of concept on a volume or a tick bar, the stat's about the same. A volume or a tick bar tends to close at its high or low. I don't remember the exact number on it, but so when you're talking about time-based bars or volume or tick bars, the bar itself is not giving you an indication of buying or selling pressure that's happening within the bar. That's not to say that those aren't quite usable. In fact, we find 30-minute bars to be very usable because a lot of traders trade in 30-minute bars. Well-capitalized traders trade on 30-minute bars. So it's good to know what those guys are doing. But if you use bars that are using order flow, like the one that we're going to use today for system building, it combines buying and selling pressure. I call them order flow bar. The order flow bar combines buying or selling pressure with the price range that occurs inside of that interval. And what that does is it gives us the benefit of a range-based bar, which a range-based bar opens and closes, or it tends to close at the high or the low of the bar, depending on if it's going up or down. And so what the type of bar that we're going to look at today does is it tends to close at or near its high or low, and while at the same time the range of the bar will actually get smaller when the market is trending. And what this does is it opens up the door for risk management. It also opens up the door for the bar telling you what's actually happening inside the price action when you look at the bars. So there are different other factors about bars that are important. For example, what is the relationship between the range of a bar, say between the range of a 5-minute bar and the day, for example? If the range of the 5-minute bars is large with respect to the overall day, then the bar is probably over filtering the activity, because a bar can be also looked at as a filter. What you want your bar to do is you want it to filter out noise or randomness, but still give you the opportunity to manage risk within the framework, and for there still to be sufficient opportunity remaining in the day's range for you to be profitable doing that. And so it's very important what type of bar you use within that framework too. So the first thing we talked about is, what can this bar, can the bar tell me if there's buying pressure or selling pressure going on presently? Does it give me indication about the price action? And the other is, can the bar help me to get into a trade where it's not using up too much of the range, because the range, development of the range as you're trading is increasing your risk as you go. And so you want the bars to get small when the market is moving so that you can manage your risk within that framework. And so I developed a number of years ago the ultimate tick bar, and so that bar makes that possible because the bars tend to get small as the market trends, and the size of the bars are relatively small with respect to the overall range. And in fact, backtesting reveals that pattern or that relationship. So that relationship between bar range and trend range. we're on this one right here, right? So we're going to use the ultimate tick bar, so order flow bar today, in order to make a system that requires almost no coding. And then it becomes extremely simple because the bar itself is organizing itself around these relationships that we're talking about here. So proper bar choice and organization is an edge. The bar choice itself becomes an edge if you're choosing the right bar for the situation. So taking advantage of different kinds of systems. Does a system test have to be profitable in order for it to work? Does it have to be profitable in order for it to work? And the answer is no, it actually doesn't. So you could actually be running system performance summaries and actually have something right in front of you, and you could discard it because you're not looking for the right thing. So I'm going to show you a couple of things that you can look for on a performance summary that can help you to identify whether or not a performance summary can be useful to you, even though the performance might be kind of lousy, at least on the performance summary itself. And I'm going to show you how you do that and how that fits into a bigger picture. What parts of a system performance summary can I best use and how? So we just talked about that a bit. How you can tell what kind of a system you're looking at just by the performance summary. We'll take a minute on that. Actually, I'll cover that right now because I don't have a specific slide for that. So what kind of a system are you looking at when you look at a performance summary? Well, as a general rule, and if you're serious about building systems, you should really know this right off the top of your head. Trend-related systems tend to have lower winning percentages, and the average winner tends to be much larger than the average loser. So I'll say that again. Trend-related systems tend to have lower win percentages, and the average winner tends to be way bigger than the average loser. On a counter trend type of a system, the win percentages tend to be fairly high, while the average winner is often a fraction of the average loser. You can put together hybrid systems that take advantage of both sides of that. But the type of system that we're going to work on today is a trend-related system that may have win percentages that seem a little low, but that get caught in really big trades. And in fact, trend-related systems stack other things in your favor too. There could be a whole webinar on that subject as well. So, but we won't cover that today. But trend systems stack things in your favor over time because you get caught in really big trades, and as long as you're managing risk, like in relation, we talked about bars and how it can help you to manage risk a few minutes ago, that'll start stacking up. And I'll actually show you when we look at a chart how you can see that just by looking at a chart with Bloodhound down there. So what kind of systems have a lower win percentage? Trend systems. And so the next one there is, what is the relationship between average maximum favorable excursion, MFE, maximum favorable excursion, and maximum adverse excursion, average maximum adverse excursion? Why do you want to know that? Well, maximum favorable excursion is how far does a trade go during the duration of the trade? How far does it go favorably, in your favor, during the excursion of a trade? Then the other one is, what is the average maximum adverse excursion? How far does it go to your disadvantage during the interval of a trade? And we're going to look at some performance summaries during this webinar where we're going to look at those numbers. So you can find absolutely astounding statistics related to these metrics on a performance summary. So, and then we're going to cover how to make a decent system great with discretion. So what you then come to is a point where you understand what a system or bias test, we're going to talk about bias test in a minute, and understanding what that bias test represents, and then combining that with other things to make the system just absolutely awesome. Absolutely awesome. In fact, the very best trading systems ever developed, I've been developing trading systems since 1991. Ty was nice and said I've only been doing it for 20 years. But in fact, I developed my first trading system in 1991 when I graduated from college. So the very, very best trading systems are made up of components of things that work standing on their own, just really, really simple concepts that works on its own. So if you can conduct a bias test, we're going to look at some of these in a minute. If you can conduct a bias test and it shows you that there's a favorable bias within the test, then you know that you can potentially use that as a component. What happens is when you get 3, 4, 5, 6, 7, 8, 9, 10, etc. of these things together that you just know about the way the market moves, then you have a system that it's almost impossible for it to fail. Because the biggest issue that you get into in system design is systems fail. And so what we're talking about is developing systems because you're using that as a basic structure. You're making it up of simple components that each stands on its own. Then the probability of the system failing goes way down, because if one component fails and there are, say, 8 components, you're only losing 12.5% of the system. And so if you thought about it, say, from the viewpoint of evolution or something, as markets evolve, then the probability of becoming extinct goes way down, because at any given time you might only lose 12.5% of your potential. So it's just kind of a metaphor for thinking about that. So what's a proof of concept or a bias test? Well, basically you have a general idea. And so the most basic idea we're going to look at in just a minute. But I want to ask these kinds of questions. What kinds of things are true about the best trading systems? Well, we just talked about that a little bit already. We want our trading system to be made out of components of things that are each stand on their own. And we want them to be really simple. So that brings up the question, how many lines of code are the best systems? The very best and most successful systems I have ever developed that made me the most money and made it possible for me to live the lifestyle that I've lived as a trader were 2 lines of code. 2 basic lines of code, a buy line and a sell line. Usually just exploiting one simple relationship. And then a couple of lines for your stop. Usually the futures clearing firms don't like it if you're not running stops. And that's it. That's it. So basically 2 lines of code and a couple of stops. So how many lines of code? Basically, the best systems are very, very simple. And so that's why today we're going to develop a really simple trading system that's standing on a firm foundation. We start with that firm foundation of using a data bar that organizes the data in intelligent ways that help us to manage risk. That's not filtering out too much that makes our risk go up, but it's not got too little in it that we can't get what we need out of the market. And so how you can identify a system that can help you. We're going to do that. So we're going to show how to do a simple bias test. So we're going to look at a few of those right now, and we're going to look at the MFE and trigger points and things like that. So using the UT bar, and we already know that has a bit of an edge, and it particularly has an edge in a market that's volatile or that trends, or that tends to trend. What happens if we test one of the simplest trading systems ever, and that's the turtles? What's the turtles say? Well, the basic system said buy the highest high the last 21 days or sell the lowest low of the last 21 days. So it's basically a month. So let's say if you go out to a new monthly high, you're going to buy. And if you go out to a new monthly low, you're going to sell. And then what they would do, since that would be absolutely horrible to experience, is they do it across 20 or 30 commodities. And then you get a whole industry around it called managed futures. There are different themes and variations on how to do that. You can also use moving averages or things similar to that. But it's just one of the simplest systems ever. 2 lines of code. Buy the highs high the last 21 days, sell the lows low the last 21 days, and that's the system. No attempts to optimize or narrow it down. Now these days, so they did that decades ago. These days you can actually do that in the intraday framework. When I first started trading, you couldn't really do that in the intraday framework and really be successful with it, but these days you can, and we're going to take a look at a chart that has that in a minute. So, and then we want to know what's the favorable excursion within that. So what I did was I just coded that up. So Richard Donchian was one of the turtles, so I just called this Donch 3, just Donch 3. And this indicator is actually built right into NinjaTrader. So you just take a Donchian channel 10 period, and you compare it to the close. So I'm not trying to do any kind of intrabar analysis or anything like that. I'm going to wait for the close, and I'm just going to, if we cross to the upside, it's going to turn the background green, and if we cross to the downside, it's going to turn the background red, and we'll just do that as a bias test, just taking a look at it and see, hey, what happens if we do that? And this is it. So I have the Donchian channel on this chart. This is a 1000 UT chart in crude oil. And what happens is when that breaks, usually you'll see a little V there. When the indicator itself forms a V, it's going to buy it at the close of the bar. And then you get caught in a trend. Then it comes down there and triggers right there. I don't know what happened after that. You get a little sell right there, and it comes down through here. And so just a simple bias test. And so this is the performance summary for that test using an ultimate tick bar. Now look at this and I go, wow, that's since 425. Why did I use 425 on this performance summary? Well, that was the last Shark webinar. I just ran the test from the last, I ran all these tests today from the last Shark webinar to, well, it was a few days ago when I was developing this, so it's not entirely current, but it's pretty close. So $9,600 on the long side, about 1930, short trade 7,700. Average short trade, wow, about 80 bucks. That's not bad. That's not bad. Now you see that percent profitable is around 43 or 44% or so. And so you automatically know when you see that this is a trend system. If that number was higher, you'd know it was probably some form of a counter trend system or a hybrid system. So very often with this kind of a system, you're going to see average win to average loss. This was about 2, right? So a little bit lower with the long side, about 1.72. And then you can see that the largest winner is quite a bit bigger than the largest loser. That metric's okay to look at, but what I want to bring your eye to is these maximum favorable excursion stats right here. So maximum favorable on the short side is 454, and adverse excursion is 212. So it's over 2 times. So what that would feel like in experience is that it would move against you by 21 ticks or so, and move in your favor about 45 ticks from the entry. Similarly, numbers not quite as good on the long side, but it's a little bit less on that. But on average, about 2 to 1 on that. Maximum adverse excursion about 20 ticks, and maximum favorable excursion about 40 ticks. And so what that does is, even though you might look at this and go, well, I'm not really sure I want to trade that, although this isn't the worst thing on the planet. What you know is that when this thing goes, it really goes. It really goes. I'm going to show you some other stats in a minute that go hand in hand with this. In fact, we're going to look at it from the other side. How far does it go once it triggers? And I'm going to show you why this thing works. Well, let's take a look at that. So, so you can use a system as it's designed, just like we just looked at this mechanical system, and it's got a bit of a bias in your favor. But we talked a minute ago about making a trading system that's made up of various components, okay? And the concepts that we share in the trading room are often more of these components than you really even want to know. But we know many different things that can help us to understand where the market's more likely to move or not, where the market's trending or not. Sometimes when the ranges contract, trend systems get caught into whipsaw situations. Well, if you're aware of what defines contraction, then that can help you to stay or only trade the system to the long side that day, for example. That happens all the time. The simple systems are best, and then you filter for that bigger picture of what's happening in the market. So, you can choose to just trade a system mechanically, and many traders will do that because they feel it helps to get themselves out of the way. There are issues. I remember one time I had a system, and I had the broker execute it for me. Actually, this has happened many times, and it's kind of crazy. So I'm executing the trades at one broker myself. And I tell the broker at the other firm, they go, well, we really want to trade your trading program. I go, okay, you can trade my trading program, but I need you guys to execute it. And then I'll see that, I'll see on a monthly report, I'll go, I see that we lost some clients, and I'll reach out to the broker and I'll say, well, why are we losing clients? I say, well, because of the drawdown that we're having. Well, what drawdown? What drawdown that we're having? And they're like, well, you're in a 35% drawdown. But on the one where I'm executing, there's nothing near that. And that's because the broker just will come in like, 10 minutes late and fire the trade. And when they do that, they start stacking up losses where there were actually gains. Crazy stuff like that happens. I've seen that happen more than once. And so you bring these things together into a cohesive whole and add that knowledge to the already existing system, and it helps you to stack things up in your favor, or you trade it mechanically. So what's another system that tests in a similar bias? I have another system that I'm going to show you in a minute that's related to this Donchian test that we just did. And but it's kind of hitting it from a little bit different angle. And so, we talk about proof of concept or bias tests. Well, now we got two different systems that are really testing the same thing in a different way, but one might have a little bit of an edge over the other. So let's take a look at this. When systems of this general design trigger, it's exploiting a higher level tendency to follow through. And the stat is to the tune of about 70 ticks about 85% of the time. So when, this is very interesting, when that, in this market, with this bar, when that Donchian channel breaks out, it tends to do so to the tune of about 70 ticks, that's maximum favorable excursion, 85% of the time. Well, what we had seen is that the maximum favorable excursion for that was around $450 or something like that. And so what happens is it takes it about 30 ticks to trigger, and then there's another 35, 40 ticks remaining, and it tends to do that about 85% of the time. So if you know that, you know that even though that performance summary looks kind of lousy, that you got stacking up some serious stuff in your favor right there. And so what you might choose to do if you were just going to use that system by itself is you might choose to wait for a retracement or something like that and get that these numbers even higher. That would be a form of a hybrid system, and you can start getting your win percentages to go a lot higher when you do that. So this is a general statistic in crude oil using this bar type over about the last year or so. So let's look at a better way. So that last one I think turned about 10,000 or something, and the average trades were only about $40 or something. The short side was better, the long sides. But what this system does is it looks at the trend, and so very often it will get into the trade before the Donchian triggers. It'll get into it before it triggers. And so you can see that the favorable excursions here is over about 2.5 to 1, so you're picking up a bit of an edge. This one's about 2 to 1 approximately. And so it follows through about 35 ticks or so, good percentage of the time. Why does this system not show that 85%? Well, because it will give a lot of it back. Because if you're placing an order at the highest high and the lowest low, it's going to give a good deal of it back. And so that's why when you're looking at these, if you're using a multi-contract strategy, you can actually take a system that's a total loser strategy and turn it into a winning strategy. So this is since the last Shark webinar, 425, that we did, and we actually coded this system live at the last webinar. That's the equity curve for it since the webinar. It was amazing. And so that was a gross system performance based on NinjaTrader performance summary since our last webinar, the system we coded. And that system was called the Smart Breakpoint system. That's available through our sister site, IndicatorSmart. So what that system does is it uses order flow lead outs to enhance the system performance a bit, because order flow tends to lead price, we know that. And so we exploit that a little bit. And so it gives you over just a basic trend system, it gives you about a 15% edge, depending on how you measure it, using the adding the order flow to the equation. Later, we're going to code a super simple system using the same kind of technology in Bloodhound. So why do these systems work? Well, number one, we choose a market that trends. We choose a market that's got good structure. The daily ranges are small with compared to the alternations within the bars. We get a bar that if it's closing at the high or the low, it helps us to know something about what's happening in the market. And we also choose a bar that is sensitive to lead outs and order flow and things like that. And so, and when we can get a stat like this guy right here, 70 ticks 85% of the time historically, we know we're really stacking some serious stuff in our favor. So, well, why else? Just the system design. The system design is based on really solid premise, starting from the organizing the data to the structure of the market within the framework, the capacity for managing risk and everything else. So what would happen if we just used the trend component of this system that we designed last time? We're going to take a look at that in a few minutes. So I think I accidentally had a copy of that slide there. So taking advantage of high probability trend momentum patterns. So we're going to use the same system that we did at the last webinar, Smart Breakpoint system. We're going to make that system even simpler today. We're going to make it even simpler using the Smart Trend system. That's something that I developed from IndicatorSmart. Let me give you a little bit of history on this. So what happened back in the day, you used to be able to actually trade certain markets. If you chose the right market and you organized your data intelligently, you could actually trade a market by what's called serial correlation or autocorrelation. It's like, if the market's up today, then I just simply ask the question, how likely is it to be up tomorrow? If it's up tomorrow, how likely is it to be up the next day? If it's down tomorrow, how likely is it to be down the next day? And you just compile statistics on that. And so you actually just mark out each day or in each interval. So you're asking the question, for example, a lot of times when you code a system, you ask the question, well, you know, if I just hold for 5 bars, is it profitable? This is a bias test, right? Okay, it predicts the market for 5 bars, whatever that interval might be, right? So what the trend system does, these days it's not as easy to do that, because as soon as that stuff got published, it got published in the Market Wizards. So just said, hey, all I'm doing is slapping a moving average on, or I'm just looking at yesterday was up, and it just continues. You know, market used to do that if you chose the right one. But what's happened nowadays, the market's much noisier, and so you have to use special filtering in order to filter the noise out so that you don't false signal and everything else. And so the trend system enables us to do that. And so what it does is it takes price action, momentum, and order flow and it just reduces it to a simple color change on with Bloodhound, red or green. Trend charts often with these bar types tend to move away and making the risk manageable, especially when you consider the small size of the bars with respect to the overall range potential. With this type of a system that moves away, it's connected with overall range expansion. That's one thing that markets do every day. Market opens and it does a certain number of ticks each day. And we spend a lot of our attention on predicting what those range expectations might be. But we do know that in this market, one metric that we did for that is we know once that Donchian channel breaks out, it tends to go 70 ticks total, a really high percentage of the time. So basic color bar theory. Why do the color bars work? Well, because it's filtering the noise out of the trend. And it makes it possible to predict the next bar at a high percentage rate based on that old principle of price persistency or autocorrelation, etc. And we're making it so that we can use it in the present day. We used to be able to do it in the old, 25 years ago without any filtering at all. So how to predict trend with high percentages for trend persistency potential. Let's predict the color of the next bar with about 87%. So you get a bar, it's blue. You get a bar, it's blue. And then 87% the next bar is going to be blue. But when the next bar is blue, it predicts the next bar is going to be blue at about 87% too. And so then you get serial persistency, or autocorrelation it's called sometimes. So this is an example. Actually, if I'm not mistaken, wow, that's today's chart. Wow, very cool. So so what happens is this, the color of these bars is painted by the smart trend system. It's painted by the smart trend system. And I have just coded this to make those color change based on the bars. So when the bar turns blue, background goes green in Bloodhound, turns red. Now this is and these are the Donchian channels on here, right? Now this system isn't triggering off the Donchian channels. This one's looking at the a tighter version of trends, so it tends to get in earlier. See, the Donchian channel wouldn't have triggered again until you got up in here. So this one's getting an inside. So now earlier we were talking about the bars and the relationship between the bars and trends. So let's take you this example. This is a beautiful example because when you're looking at a chart like this, you're looking at risk and reward. Because you know this trade here failed. You know this trade here failed. However, when it re-triggered, you ask the question, well, how far was it from the entry? And the answer is only a few ticks. Only a few ticks. And so what happens is it false triggers, but the loss is small. So you look at that, you go, small loss, big gain. Small loss, big gain. Small loss, big gain. Yesterday afternoon was getting whipsawed a bit. The market was really contracted yesterday. Yesterday we knew not to take the short signals because of other factors that we have from our dirty dozen and our trend identification. So yesterday you really knew not to take the shorts. It keeps you out of trouble a little bit. We do that in the trading rooms and teach that in the trading rooms. But these are just the color bars with bloodhounds set up to match it. So we're going to build the smart trend system. We're going to use the color bars, and then I'm going to also add to it a simple inside bar filter. Why do I want to do that? Well, if I'm getting inside bars, I don't want it to trigger because theoretically a ultimate tick bar should not have an inside bar. It should be closing at a new high or a new low. We could go back and look at that just for a minute. This is the only inside bar I can really see on this chart. There's a tend to close at the high, close at the high, close within a tick or so of the high, close it within a tick or so of the high. This kind of thing, closing highs. When it's going down, it closes at the lows, or tends to. It's the nature of the bar. The bar itself becomes a trading system. Almost, it just needs a little help. And so the system that we're about to code up exemplifies the concepts we've been talking about today. And you're going to get the code after the webinar. I'm going to give you a link for that. Let's see here. I think, are we supposed to code it right now? Yeah, so let's code it up. Let's code it up. Let's have some fun. So what I'm going to do is I'm going to create a new chart and bring that up. So if you're learning this, we're just going to I'm going to try and do it from scratch. Okay, so I'm just put Bloodhound on the chart, and then we're just going to create a new template. I think it's defaulting to this. I'll just clear that out. Say new. Are you sure you want to clear the data? Yes. Okay. And we got so we got Bloodhound loaded on the chart, empty template. And so what we're going to do is bring that up. Okay. I'm going to bring that up, and then this is where Rob gets a little confused, perhaps, because he's juggling several things. And so the first thing I want to put in here is the color bars, and I want to do that. I think we're going to do indicator comparison. Add that. No, it wasn't indicator comparison. It's yeah, it's threshold because, okay, so let me tell you about this for a minute, guys. The way I code, the way we coded a lot of the indicators that we do at IndicatorSmart is we code them for Bloodhound. So what these things do is they make it really, really easy to code. It's like if you code it in other things, it'd take you a bunch of things. But what I had the programmers do was put outputs to these indicators that it's like a state indicator. It says, okay, well, the indicator is in this state. The smart color bars is in this state. It's long or short. And so what we do is, here I'll show you in a minute. I'm going to bring the smart color bars on here. Smart color bars. I add that new. And then, so these are the plots within the bar, and I'm going to use the signal within the bars. Just makes it simple. And I'm going to do 8.3 on that. And then what I want to do, there's two outputs from this. There's a strong output, and then there's a weak output. The 2 is for a strong, long tendency, and oops. And then if it outputs greater than 2, I'm going to tell it to print a 1 to Bloodhound. If it's less than that, I'm going to tell it 0.9 because I'm not really worrying about the other one. And on the short output, I'm going to say -9. And don't worry, you're going to get this code, and you can look at it later and review it if you want. As a negative. You may or may not need to do that. And then the other one that I want to do is I want to do, and this is kind of cool, I want to do a indicator comparison. So I'm going to name that just for good. This one is smart color bars. And then this one is going to be the inside bar filter. So I could just call that, I could call it close is greater than the high of 1 bar ago, or close is less than the low of 1 bar ago. That way when I look at it, I can tell exactly what it is. Okay. And then what I want to do is I'm going to use, Shark has a nice feature to it that you can pull in information from a bar. It's called Chameleon. Chameleon gives me access to the highs and the lows, for example, within the bar. I'm going to put Chameleon on there. Hold on just a second. Double check and make sure I'm going to get it right. So I'm going to add that new, and I'm going to say the close on this one. And then on this one, I'm going to put Chameleon in there, and I'm going to choose the high and the low. I'm just pulling that up so you can see it. Chameleon, add, and put it in here. And I'm going to choose the high for long and the low for short. And let me just double check and make sure that I've got the look back details on that right for you. Where to go? Here we go. Yeah, and so this one's 0, and this is of 1 bar ago. And then we want 1. So if the close is greater than, as we know this bar tends to close at its higher low. So I'm under pressure if I'm outside the range of the prior bar on the close, right? Pressure to the upside, I want a 1, and pressure to the downside, I want a 1. Okay. Then what I'm going to do is I'm going to go over to my logic tab. This one should have been, yeah. I'm going to go over to my logic tab, and then we're going to put all this together. I'll create a new one, and we're going to call it, let's call it advanced. And then what I'm going to do is I'm going to go solver node, existing nodes, smart color bars, solver node, existing node, the inside bar filter. And then I want to add one other thing to this, the toggle, that what that's going to do is it's going to keep the bars red or green until a change in state. Okay, and so then I also want a AND logic node, because I want, if the smart color bars are in a buy state and it's not an inside bar, then buy. And if the smart color bars are in a short state and it's not an inside bar, then sell. Hold that condition until the next change in state. And I get that. And it'll save it on its own, but I'll just call this Shark. The one I'm going to save for you later is going to be under a different name. I'll show you what that is in a little bit. Oh, Shark Webinar. Okay. And then we got system. Piece of cake. Got system. Shark Webinar Advanced. Like I said, when you get the code later, it'll be a little different than that. But that's just how simple coding can be. Again, the bars, when you're wrong, it's small. When you're right, it tends to be big. And we know that once it breaks through on that Donchian channel, we could throw the Donchian channel on here. There's a 10 period. I'll add that on there, right? So what happens is when that guy triggers right there, I know I'm going to get another trigger right there, and I can expect follow through to the tune of about 30, depending on how big that range was, but you're getting in way before. And so this system gives you an edge over using a straight out Donchian kind of an approach. So, all right, so let's go back to the presentation and kind of sum all this up for everybody. So when you run the back test on this from the last webinar, this one returns about 19,000. The trades are a little bit smaller, to the tune of, like I said before, about 15% than the smart breakpoint system. The win percentages are a little smaller, and the ratios of the maximum adverse excursion and maximum favorable excursion, I think, are a little bit less. And so it's a little bit less of an edge. So, if I'm going to look at these things as concepts that stand on their own, okay, well, I got Donchian channel, tends to follow through 35 ticks or so on average, a good percentage of the time. I've got the smart trend system, I've got the smart breakpoint system, all these things kind of standing on their own, each one. You can even, last time we built the smart breakpoint system, you can even run the smart breakpoint system based on the lead outs alone. If you want to learn more about that, you can go look at that webinar. So what you just do is disconnect the smart trend system from that system, and it'll actually test out. So that stands on its own. So any component that I'm putting into a system, I want it to be basically tradable on its own at some level, at least in terms of the excursions that I expect to get out of it. But this is just a fantastic testing result. So how does it compare with the smart breakpoint system? Well, we just covered that a little bit. So how do you make this better? How do you make it better? We began the webinar discussing system concepts, how you build superior systems, putting things together by pieces, and each one stands on its own. So there are other components that we can, or concepts that we can bring into this, things that we do in the trading rooms, for example. But all these components are based on this different uses within the Smart Patterns trading system. If you already have the Smart Patterns trading system, you can you already have all this stuff. So we use that system in the trading room every day, and in our trading rooms, and then you can bring other concepts in that stand on their own, and then basically you've built your own system using these kinds of frameworks. What's nice when you put all that together on your own is that you own it. I mean, and I don't just mean you own it, I mean it becomes an integral part of your consciousness and your thinking, which is a big part of what we do in the trading rooms, is moving towards that kind of development, personal development kinds of things. So we talked about how some of these indicators are designed to be used with Bloodhound to make it really easy to code. You saw how easy that was. It's a phenomenal trading system. I'll tell you guys, I used to think if I could eke $12,000 a year out of a trading system, that was just phenomenal performance, just phenomenal. But this thing has really cooked since we released it on April 25th. And so it makes the coding really simple, so you can focus on other things and bring in other system components and things like that into it. So if you really want to learn how to trade and think systematically, you want to learn more about these kinds of things that we share in the trading rooms. And the Smart Patterns trading system can be combined into any number of trading systems, and that's really what we've been talking about today. How do you put these things together in a way that works for you? We cover these kind of concepts in the trading room. But like I said, the trading rooms go way beyond just systems and trading, way beyond. Today in the oil room, we're talking a lot about how you set goals that work. How you set goals that work. Yeah. Oh, there's a learning state. You remember to stay in the learning state? The gaze, get that peripheral vision opened up, open your mind, increase your grade point average if you're still in school. So this is a special offer that I've put together for you today. The Smart Trend System is what we covered today. The Smart Breakpoint System is the last Shark webinar. That's the second one you'll see when you go to the page I'm about to give you. Ultimate Tick Bars package. That's the color bars and the ultimate tick bars. Smart Patterns trading systems. The oil room. And, well, somehow the stock index trading room got cleared off of there. We don't want to leave that out of there. But stock index trading room when you get to this page. So where do you go to get all this? I just sum it up so that we don't have to have a lot of questions and things. If you go to IndicatorSmart.com/shark1, should take you right there. And so if I copy that, and I think if I put it in the chat, that should take you right there. That should take you right there. So let me just cover a couple things about the trading room. So the trading rooms are really price action based, but we also look at market profile. We look at order flow patterns that are put together in a way that's really easy to understand. It's graphical. There aren't 10,000 numbers all over the charts and things like that. And the tool we use for that is called the Trap Trader Oscillator and Smart Momentum Patterns. We got a lot of really awesome traders in the rooms to share their insights and methods. In fact, the rooms are really a lot about sharing. We'd love to have you aboard for that, for the sharing that happens within the rooms. Secrets of trends and range expansion. A lot of focus, like I said earlier, on predicting what the not only what the trend is, but what the likely range expansion is going to be. If you know what the trend is and the range expansion, that's a really huge part of the game. And we talked about that some in today's webinar with the stat following the Donchian breakout. So when you're a room member, you benefit from the Smart Patterns trading system and thousands of hours of member use and refinement. Benefit from special content geared around personal development and personal growth. That's what we talked about a minute ago. Personal development and personal growth. So just like any good athlete, I like using metaphors from athletes, because athletes have to be really at the top of their game all the time, always growing and always advancing. And that's the kinds of things that we focus on in the rooms, is personal development and personal growth that goes way beyond trading. And puts you at cause in your life. And we cover things about trading system design and concepts that help you to see, hear, and feel what lower levels are doing. One of the biggest things that happens in the rooms that most members experience is where they used to come in and you know, take 40 trades a day. They're now starting to see the big picture, so they only take a few trades a day and get caught in bigger trades. So these concepts are applicable in any market, but they work better in some than others. So you can visit our reviews page on the site or on the again, that link there, IndicatorSmart.com/shark1, and it'll be here, shark1. IndicatorSmart.com/shark1, and it summarizes all of those things that we made the system out of today and beyond. So that's what I have for you today, guys. A few minutes over. I'm a few minutes over, and if you have any questions, if it's okay with, I don't want to. Yeah. So Jimmy, hey, good to see you, Jimmy. Yeah, send me an email and I will send you the updated version of the color bars that has those discrete outputs. Yeah, yeah, send me an email and I'll get that over to you so you can code this stuff. And the thing with Forex, Mike, is the volume data is unreliable. You can pull volume data on Forex, but then at the end of the day, they all change it. So you can't backtest anything really. But yeah, so you got to be careful with that. The concepts that we're talking about totally work in Forex. They totally work in Forex, and I've been working on some Forex things with, you bet, Jimmy. Good to see you, man. I've been working on some things with some Forex traders, and particularly what we call sweet time, for example, in the oil room applies in Forex markets. There are certain times that trade that are better than others, things like that. Yeah. Yeah, John. Hey, John, it's good to see you, man. Yeah, if you go to that link, it'll get you to the IndicatorSmart.com shark1. I put it in the chat there. Yeah, I didn't hear back from you, man. I thought, get back with me on that that email. Yeah, it's good to see so many familiar names. Well, Patrick, you can, I mean, you can pull the Bloodhound template, but it's really built on that backbone of the indicators that we use today. Yeah, so don't have a whole lot of other questions, and so that's what I got. So thanks, John. So that's what I have for you. Again, I would like to thank you all for coming out today and spending the time to learn some system development concepts. System develops is my passion. My absolute passion. There were years where my wife could call me to dinner 14 times so I didn't hear a single word she said. I've gotten better over the years with it, but I was just absolutely passionate about system development and testing, and so I have a lot to offer to bring to the table to share with people on this this kind of subject. So I really enjoy doing a webinar like this today. I'd like to again thank Shark for having this presentation in Shark Week. It's awesome. Awesome. Rounding applause for Shark and Ty and everybody for putting it together. So, okay, guys, thank you. And I'll hand it back over to Ty.
Awesome, Rob. Hey, thanks for being a part of this this event. It's always a privilege to hear what you got to say, man. And to all the viewers out there, we will be sending the recording of this presentation out shortly. It'll be there before the day is over. And we'll see you guys tomorrow. So everyone, take it easy.